It's time for Wise Money with Korhorn Financial Group with certified financial planners Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of the Wise Money Show with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thanks for being here, friends. My name is Mike Bernard. I'm your host. I'm also one of the certified financial planners on the program. And with me in the KFG studios, my business partners and fellow CFPs, Kevin Korhorn and Josh Gregory.
As the financial landscape continues to evolve, having an emergency fund is growing even more important. What previously was a good idea is now an essential component to achieving lasting financial success. So what's the right amount to have in your emergency fund, and where should you hold it? We're going to answer these questions and more on this episode of the Wise Money Show.
Wherever you're at in your financial journey, we're practical. It's going to be practical application today. The emergency fund, the staple that you've heard about for decades, it's gotten more important. We're going to tell you how and answer a whole slew of questions. So if you have a question for the program, we'd love to hear from you. You can call or text us, 574-222-2000. That's 574-222-2000. Online, wisemoneyshow.com is where you can find us. And then all over social media, wherever you're at, we are there as well. Search the Wise Money Show. Engage with us that way. Yeah, the emergency fund is not flashy. You know, we talk about some pretty exciting concepts. This is the blocking and tackling that wins games and championships, but you know, it's not in the highlight reel. So before we get into asking, all sorts of questions, is a Roth IRA count as an emergency fund? What if you can take a 401k loan? Does that count as an emergency fund? How much should you have when you retire? Do you need an emergency fund when you're starting your financial life and you've got all these competing priorities? Where does emergency fund rank? We're going to answer all of those, but first start with where in your financial life, your integrated financial life, where does the emergency fund fit?
Well, the emergency fund is, and if you look at the 6 areas of financial planning, it's in your present financial position. And the interesting thing is if you look at the 6 areas of financial planning, the question is, are they related? Are they connected? And I can make the case, we can make the case that the emergency fund is, Mike, you said it's not, terribly interesting or flashy, but it is foundational. Mm-hmm. It is it's the rock on which you can build.
When do you ever drive up to your house and be like, that's a nice foundation? I can't see it. It's underneath the ground, but man, do I have, my foundation has good curb appeal.
The concrete guys do. I know that much. But you're exactly right. Like, you think about how much money goes into the ground before you even start building the stuff that you're going to live in a house. At least that's how it is in a colder climate, right? You got to go down deep to get below frost, build a strong foundation. That was exactly the word that came to my mind as well, Kevin. This is an emergency fund is what gives you the confidence that everything that you're going to build will be solid and it's going to last. You're not going to have to start dismantling some of the fun stuff because you have an unexpected event come up.
Right, and it gives you confidence as you're looking at your present financial position. It's tied. Your emergency fund is tied into your, let's call it your cash flow or your budget, whatever you want to call it. And that is the kissing cousin of the net worth statement. So that's your present financial position. I don't know if we should talk about that. But anyways, so the next area is protection planning. And you say, well, what does protection planning have to do with your present financial position? What does protection planning have to do with an emergency fund? And it has everything to do with it because depending on how you are positioned with an emergency fund, that lets you make different and over time better decisions with your protection planning. It affords you the luxury of making some decisions that you don't have if you don't have.
We just had that conversation with Alicia Boehner, one of our insurance advisors, just recently, because we were talking about increasing the deductible on your insurance coverage, allowing more of the first dollars of cost if a bad event occurs. Let that be your responsibility before you turn directly to the checkbook of the insurance company as your solution. And by accepting more of that risk on your shoulders, you can save money on a monthly basis or an annual basis on your premiums. And for a lot of people, that's an important cost-saving strategy. But you have to have the resources. You have to have your own safety net in place in case you do have a problem with the house or have a car accident or something like that.
Okay, so the emergency fund has always been important. I would argue that. And yet, my claim is that it's even more essential, is the word Kevin used earlier, even more important right now than it used to be. And Josh, you took my first reason why, and that is home and auto insurance premiums have far outpaced inflation. Inflation's just the average, the CPI. That's just the average of how much prices have gone up or gone down, how much prices have changed. And if you look at the list, and these are just broad categories, but home and auto insurance is the leading contributor over the past 12 months or so. That and then eggs. Just kidding. That's but
I don't know if you are kidding.
Well,
actually.
grocery. They're lumped into groceries. And so you look at that and say, well, what influence do you have over your home and auto insurance premium? Yeah, your driving record and where you live and the type of vehicle you drive, but also, is insurance your first dollar solution? If it needs to be, because if this thing gets in a wreck, I'm not going to be able to fix it, and I can't, miss work and not be on the road, blah, blah, blah. If insurance needs to be your first dollar solution, you got to pay more. Mm-hmm. And now, if you have an emergency fund and you can afford a higher deductible, you don't want a higher deductible, but if you can afford it, now you have more flexibility on the price that you pay, your premium.
Yeah, and if I can just have a short rant, this is actually the deductible conversation, in my humble opinion, is not really about my emergency fund. It's about, what do I want to bet on? And you might say, well, I'm not a betting man. Well, you are, because you're going to make a bet when you have a deductible. And if you have a low deductible, you're betting you're going to have an accident. That's the only reason why you'd have a low deductible. If you have a high deductible, you're betting that you're not going to have an accident. And it's there. Granted, there are more factors, but it is that simple. And if you're betting that you're going to have an accident and you have a little fender bender and you have a $100 deductible, let's say, and it's a $750 claim, if you turn that in, what that's going to do to your future premiums, you're not going to like. Because right now, the insurance companies, we've talked about this ad nauseum, but this is a hard market. And that means the insurance companies across the board are all raising their rates together.
Yeah, that's exactly why we encourage people to have a strong emergency fund, because we want you to be equipped to not have to or not be tempted to turn in these claims that are pretty frivolous, and they do start to put a black mark on your insurance history. And that black mark, unfortunately, it does cost you in the long run with higher premiums. You're exactly right, Kevin.
Yeah, so the emergency fund gives you financial confidence. Because to me, I don't gamble, and so what are the odds? What are the chances I get in an accident? I don't know, but if I do, I know they're not zero. So if I do, I want to have the financial confidence all the time that if I do get in an accident, I've got the cash to cover it. Another reason why I would say right now an emergency fund is more important than it's been in the past: we have record high interest rates on credit card. So meaning, so Kevin, going back the other, we've got, let's say, record high insurance premiums. Mm-hmm. Hard to make a lot of financial progress when you have a lot of money going towards insurance premiums. Mm-hmm. Same thing with credit cards. Hard to make a lot of progress in building your financial house if you've got tons leaking out because it's got to pay these high interest rates.
And when you don't have an emergency fund in place or a game plan for dealing with the unexpected, unfortunately, the insurance companies are happy to step in and play that role for you. They're happy to pony up the money to be able to buy those new tires or fix the water heater or whatever it is.
You mean the credit card company?
Yeah, what did I say?
The insurance company.
I'm sorry. Thank you.
I'd like to get some tire insurance.
But right, you're right. Yeah, I mean, the credit card is very easy right there. And yeah, sure, here you go. 21% interest rate, 26% interest rate. So, and speaking of, that's a third, and we'll have to jump to break, but A third reason emergency fund is how expensive are tires these days? How expensive is getting a new car? What about a new home, right? All of these things are more expensive. I'm not complaining. I'm just saying the bigger your financial war chest, or even just having a financial war chest, you're more confident in this age where everything costs a little bit more. So, okay, more reasons why it's more important to have an emergency fund, but then the most common questions answered and applied to your financial situation. That and more coming up on the Wise Money Show with Korhorn Financial Group. Hello, YouTube. Thanks for being here. This is the Wise Money Show. What you're watching right now is our weekly 1-hour talk show. Airs right here on this channel, 10 a.m. Eastern Time every Saturday morning. Also on podcast at the same time, and then also on a couple local radio stations as well, which is why the content's structured the way that it is, why we have breaks and all that sort of stuff. But we do have videos made directly for YouTube and you, our listening audience, that airs right here Monday through Friday, all throughout the work week, taking one financial concept, applying it to your financial life, 8-10 minutes long, something like that. So make sure you hit that subscribe button, turn on notifications so you're right aware every time we drop new content. And if you like the content, thank you very much.
Oh, there is so much here. Like we left a lot of meat on the bones already with those other ones.
Yeah, so
can we?
We can pick it back up, and then I'll just steer us.
I'll go. Yeah, because I've got something to say about all of them. I don't know if I should say it now or just say it on the air.
Say it on the air. Let's go.
Let's go, as Mikey B would say.
I would say that.
You did.
What are the chances Mike would say that?
With your emergency fund and the crucial component of that being your financial life, are those lazy dollars? How should you structure those dollars for maximum impact in your financial life? We're answering that question and a lot more. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFG studios, Kevin Korhorn and Josh Gregory. Every episode of the Wise Money Show is on podcast. Wherever you listen, just search the Wise Money Show, subscribe to it there, and rate the program there as well. That's helpful feedback for us. Talking about the emergency fund.
Yeah.
Okay. And so like just presenting the case for why the emergency fund has always been important. It's even more important right now. It sounds boring. It's more important right now.
Yes.
I don't think I've seen Kevin chomping at the bit more.
Yeah, I'm ready.
Any other topic?
I am loaded for bear this morning. So, but listen. So I'm gonna back up because you said so you can have higher deductibles. Well, guess what? Some of the insurance companies are saying it's actually not your choice.
Forced upon you.
Yes, here's your new policy, and included in this is a 1% related to wind and hail or whatever. And so if you're unprepared for that, and the reality is you can live for a long time, and that's not an issue. But when it becomes an issue, what is that going to do to the rest of your financial life, and what impact is that going to have?
So that might be an action item for anybody listening today.
Yeah.
If you don't know for certain what your deductible is on your homeowner's policy or on all of your automobile coverage, you may remember what you put in place previously. But a lot of insurance companies, as you just said, Kevin, are introducing new thresholds for you, and it's just baked into the policy, and you may have missed it if you weren't reading all the correspondence and everything. So you need to pause and just go check and see, well, what is the deductible or all of the various deductibles that apply on my homeowner's policy, and do you have a strong enough emergency fund to be able to deal with that if the unfortunate event occurs?
Yes. And then, Mike, you were talking about credit cards, and I was having a conversation last night with some folks, and they were talking, it was at church, so it was not financially related, but one of the guys said something about, well, we have some of these friends, and they have these credit cards, and they're at 29%. And credit cards, the interest rate on credit cards can be more than you might realize. And when I was yesterday, I actually stopped into a local financial institution, and I had just some business to do. And I was talking to the gal there. She had a bunch of questions, and she asked me what I did, and I said, well, I'm a financial advisor. And she's like, well, that's how you know the answers to all these questions about the HSA. And I said, yeah, it's one of the reasons. And so she said, well, do you guys help with debt? and she was young, and I could see it. She's the Gen Z who didn't have any guidance, so they loaded up on student loan debt and probably have a credit card balance because the credit cards are easy to get and all these other things. And my encouragement to her was go on YouTube and search how do I do a budget and start making a budget and be animalistic, because it could take a while to have a cash reserve and get that monkey off your back.
Yeah, I mean, we asked the first question, where does emergency fund fit in your financial life? And it fits within your cash flow operating system, your 3 bank account system. We've created a lot of content on that. We talk about it all the time. And an emergency fund in and of itself doesn't prevent credit cards, but a 3 bank account system does. And it's not something that's easy. It's going to take time for you to build some skill in that area and get some coaching and all that sort of stuff. But that can help. So that's what you need. You need a certified financial planner doing comprehensive financial planning. They're going to help you with your emergency fund and cash flow management system, that 3 bank account system. That's what you need.
Well, and recognize that need is going to change over time as well. As you're going through life and you're hitting certain milestones or having certain events or transitions happen in your financial life, the need for the emergency fund may just keep on going up. I think about when you have a baby, all of a sudden the stakes are higher. There's more mouths to feed, even if you had an interruption to your income, or there's just more things that can go wrong with people's health and so on. If you buy a house, there's more stuff that can break, right? When, Kevin mentioned student loans. When you have more debt, you have more monthly payments and obligations, which means there's just a drain out of your cash flow. You need to have a more robust emergency fund to be able to handle those cash flow obligations as they creep up.
Okay, so that takes us right to the next question. How much should you have in your emergency fund? It's just in general. How much should you have? Dave Ramsey? This is 3 to 6 months of your lifestyle, 3 to 6 months of your monthly budget. Do we need to get more creative than that? And then is that the range? And how do you know where you stand in that range?
I think that's a great range. I mean, you could have more. Josh and I used to serve a guy that worked a year in advance. He'd pay his taxes basically a year in advance, and he'd have next year's stuff there. One time we went to an economic forum, and we listened to a guy talk about his dad who had a business, and he had a year's worth of expenses in the bank. And that there's a cost to that. Mm-hmm. I'm looking at a money market from a local institution, a silver money market savings. And you think, well, money market pays a decent rate. This one pays 0.02%. So that's 2 basis points. 100 basis points make 1%. So 2 100ths of 1%. So on the $150,000 that they have in this money market account, they're going to make $30 in interest this year. So versus potentially, if it was at 4%, it'd make $6,000.
I want to go there next. Where should you hold it? But Josh, any thoughts on how much?
No, I would support the idea of framing it as a 3 to 6 month emergency fund. Conventional wisdom would say, well, if you have 2 sources of income coming into the household, maybe you can be on the shorter end of that spectrum, simply because we're framing this as the worst emergency that may happen to you is an interruption to your income. One of you loses a job, you're disabled, you're sick, you need to take some time away from work to care for a loved one. Whatever it is that stops the paycheck from flowing, hopefully that same event isn't going to cause both paychecks in the household to stop flowing, and therefore you can make a smaller emergency fund theoretically stretch further. But if you are a one-income family, the stakes are higher in that case. If it's an event that takes you out of the workforce or stops your income from flowing, the entire income for the family is affected. And so giving yourself more time to be able to bounce back. The higher you rise in your organization or in your industry, the harder it is to replace your income if you were to lose it. Yep. It takes longer to find that next career opportunity or whatever. So you may lean even heavier than that. And I'll throw one more category out there. If you don't have any earned income coming in. Maybe you're in retirement. I always love having 12 to 24 months worth of liquid cash that you know you're going to be able to live off of, because this is creating a defense for you to tap into your longer term investments.
Yep.
You're trying to protect yourself from the temptation or the need to be able to start liquidating investments that really need some time to bounce back if we happen to be in a dip in the market or your investments are temporarily depressed.
A couple other things that I would add that has already been said. If you own a home, you might need a little bit more emergency fund. If your home is older, you might need a little bit more emergency fund. If you have kids, you might need a little bit more emergency fund. If your kids are in travel sports, yeah, I'm just kidding. If you have a older vehicle, might need a bigger emergency fund. All of those things, like life stuff, sort of factors into that. So
I'd ask yourself, who would be affected by an emergency occurring in your life? And it may be more than the people just living under your roof. How often do we find that there are clients or families out there where really you're providing the safety net for another generation potentially? And if that's the case, again, you need a bigger safety net in place.
yeah, because how frequently do emergencies occur? Not that frequently, but every day, a fully funded emergency fund is giving you financial confidence. The confidence that, yeah, I do have this high deductible, and if there's an issue, I've got the cash. I do want to save aggressively for my retirement, and I know that if I send some money downrange and something comes up in the short term, I've got some cash as well. So financial confidence. Should your Roth IRA account, home equity line? We've got those questions and more coming up on the Wise Money Show with Korhorn Financial Group. That's cute, Kevin. That's cute. Kevin's like, hey, look at the time. I'm always aware. Always. But I appreciate it. Yes. All right. So we'll get into that interest rate. So like is just money market, is that where it should be? What about a CD? Is your Roth IRA account?
Third segment, right?
Third segment. This probably takes the entire segment. So, all right, here we go. Believe it or not, one of the most common emergency fund questions that we get isn't how much should you have or should it be in a CD? It's actually, should it be in my Roth IRA? Does my Roth IRA count as my emergency fund? We're going to answer that question right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFG studios, Kevin Korhorn and Josh Gregory. Stay up to date on all Wise Money content. Find us online. wisemoneyshow.com is where you can find us. And then all over social media, wherever you're at, we are there as well. Search the Wise Money Show. Long time ago, I was just getting peppered with a lot of emergency fund type questions. And maybe it was the stage of life that I was in or the clients that I was serving. And there was just it seemed like constant seeking, okay, well, should I put my emergency fund in the CD? And it sort of crystallized my 3 rules of an emergency fund. I call it 3 rules of your savings account. It should be FDIC insured. It should be liquid. It should be free. After that, get the highest interest rate possible. And now, is that perfect in every situation? No, but I would start there, okay? So FDIC insured. Why? Well, it's possible you have an emergency at the same time the stock market has the emergency. It's possible that you are facing some financial challenges right at a time there's heightened financial risk out there. And you don't want to worry. Again, if this is going to give you financial confidence 24/7, I would want the confidence that the money's going to be there if and when you need it, even if it's at a moment's notice. So FDIC insured. Completely liquid. Now, you could argue if it's an emergency, I can put it on the credit card, and then as long as I can get the money within 30 days and pay it off, I'll be fine. Okay, yeah. Or if there's an interruption in income, I'm going to get my paycheck 2 weeks later, and so I've got a little wiggle room. That's fine. Again, but for financial confidence, just assume that you need the money. Can you get it? can you get it? And then lastly, if these dollars are just going to be hanging out for a while, I would want to be very careful of what sort of drain is getting pulled on those dollars. So a monthly statement fee from the bank or whatever, I just don't need it. After that, go out and get the best interest rate possible. Guys, you agree with that? What does that lead you to as far as where an emergency fund should be held?
Well, so FDIC, in the spirit of being a jargon-free zone, is a Federal Deposit Insurance Corporation. So that is a federal program that backs up to $250 per depositor, and there's a lot of different ways that you can get to much bigger numbers, especially if you're a couple and whatnot. But so the question is, if I'm using that, where should that be? And Mike, I like your guidelines. It's confusing though, because if I told you I had my savings in a money market account, you'd say, "Hey, that's a great place to have it." And I would say, well, money market can't really lose value, right?
Well, except when it does.
Except when it does, because all money markets are not created equal. Not
Correct.
all money markets are FDIC insured.
Right.
And so you have to say, all right, well, is this one FDIC insured? And then what is it paying? And that's where they can be paying little to nothing. As I was telling you earlier, I'm looking at a statement saying that it's paying nothing, or it can be paying a healthy amount. And there are times when there are other short-term instruments that actually pay better than a money market account. Mm-hmm. So, for instance, for the last couple of years, we've been looking at very short-term Treasury bills, and the nice thing is you're not paying state tax on those on that interest.
Yeah.
That's why I frame it a little bit differently, because I have clients ask me at times, well, where should our emergency fund be? And I'll make a suggestion, and their first question is, well, is that FDIC insured? And if the answer is no, it's not FDIC insured, but it is guaranteed by the government,
Yeah.
then that is as good as FDIC insurance.
Correct,
Right?
yeah.
Because FDIC insurance, the power of it or the confidence that it provides is that the federal government is standing behind these bank deposits up to limits, saying basically, hey, we're going to make you whole, or we're promising that you will get this money back if the bank were to collapse. And that's great. That gives you confidence. I can set it and leave it and know that it's going to be there. But you would say the same thing about what if it's not backed by the federal government? What if it is guaranteed by the federal government? It is actually the federal government that is going to be paying you back, as your example of T-bills would point to.
Yeah.
So that's as good as, in my mind. But the point here is it needs to be something that you don't wonder about. You are protected. You are guaranteed.
So does that rule out the Roth? Does your Roth? And so here's where the question comes from. If you're wondering, a little known feature of the Roth IRA, and I wouldn't promote this, but this is how it works. You can withdraw your contributions that you make to a Roth IRA at any time. No tax, no penalty, no foul. You can contribute $5,000 today, pull $5,000 out tomorrow from your Roth IRA. And so in that way, that could be a way of saying, well, when I'm not having an emergency, I've got more money in my Roth growing for my financial future. And if an emergency fund comes up, I'll just pull the ripcord and pull a little bit out of my Roth. What's your guys' take on that? It obviously violates these guidelines, but what's your take?
I think the risk is that if you start thinking of your Roth IRA as an emergency fund, then you're going to have money in a tax-sheltered environment that is positioned where, man, if that thing was growing and compounding over a long period of time, it is so powerful because all of that growth and compounding is accumulating for you tax-free. You never pay tax on the growth. Well, when you have money inside the Roth in something really stable and really safe, like a money market fund or a CD, you're just not compounding much at all. So you're not really getting the full benefit of the Roth. You want to think of the Roth primarily as a retirement vehicle, a long-term savings type of a tool. However, I'll tell you right now, early on in our marriage, when we bought a house, we were coming up with a down payment, scraping together every dollar that we could to create a down payment. And we took our savings down to a level that I wouldn't recommend that clients take it.
Yeah.
And the only reason I was willing to do that was because I knew that I had the Roth as a backstop.
Yeah, where's your margin? When you're facing a big financial decision, it's super important to pause before you make that decision and say, well, where is their margin? Where could I flex if I needed to?
Mm-hmm.
I agree. So here's the thing, Roth IRA, you want it to be your more aggressive investments. I'm not saying speculative and, just you either hit a grand slam or you strike out. I'm saying it should be aggressive.
Long-term, growth-oriented investments.
And when I think of emergency fund or having financial confidence, I don't think of aggressive. I think, and we've shared this before, this is an axiom that we heard from Morgan Housel, pessimistic short-term, optimistic long-term. I want to be optimistic long-term with my Roth. Now, in the short term, can you get away with it? While you're building your financial house, could you get away with it? I think so. I wouldn't want to operate like that long term, where my emergency fund is at risk, or at any point I'm going to feel like I'm drawing money out of my Roth and potentially cutting the tax-free growth that account can have.
Yeah, because you never know when, is this going to be the year where my Roth jumps by 20% because of great tailwinds in the market? If you're not participating in that because you sort of unplugged from the growth potential and set it into something safe like a money market because you're treating your Roth as an emergency fund, that suddenly becomes a very expensive move in the long run.
The case, though, is that how often do you have emergencies? I know it's very rare. Like, I get the argument. And I think it can work. I've seen it work, but I don't know if I'd want to operate like that long term.
No.
Correct. Yep.
Yeah. No, every time, how often do you have emergencies? It's really every time you have an emergency. Now, the issue is if I pull that money out of my Roth, I can't push it back in. You think, hey, the Hotel California, you can check out anytime you want, but you can never leave. No, the government says, go ahead, let that money leave. Once it's gone, it's out the door, and you can't say, okay, I pulled 20 grand out of my Roth. It was basis, so that's not a problem. I can't turn around and cram 20 grand back in.
Yeah, you've only got 60 days to be able to put a chunk back in as a 60-day rollover. If you can't do that, then the only way to get it in would be to contribute it back, and that's the slow, steady drip that can happen a little bit each year.
I have a feeling I know where the next questions are going to go, but does a home equity line of credit count? Does 401k loan count? So we've got those questions, as well as, well, what if you're a business owner? What if you're in retirement? And what if you're just starting your financial journey? So all that and more coming up on the Wise Money Show with Korhorn Financial Group.
Okay.
Interesting.
Going into segment
4.
Can't believe it.
All right, so we've got several questions left. We'll just hit. I'll steer us and we'll hit what we can. All right, here we go. Thanks for being here. This is the Wise Money Show with Korhorn Financial Group. My name is Mike Bernard. With me in the KFG studios, Kevin Korhorn and Josh Gregory. Every episode of the Wise Money Show, as well as a lot of other content, is on the Wise Money YouTube channel. Go to YouTube, search the Wise Money Show. Subscribe to it there. Turn on notifications so you're made aware every time we drop new content like this talk show. But we also have videos that air all throughout the work week, much shorter form, built for YouTube as well. So go to YouTube, search the Wise Money Show, subscribe to it there. All right, answering questions about the emergency fund. We just hit a controversial one. I can already see the YouTube comments coming at me saying, no, the Roth is a great place for your emergency fund. Where I agree, and yet it injects risk, and so I'm not sure it's ideal long term. Here's the other one. If you have a home equity line of credit, does that count? What if you have the ability to get a 401k loan, and you can max the 401k loans, 50 grand, you max it out. Based on my threshold, blah blah blah, I could get the maximum 401k loan. Does that count as an emergency fund? To me, again, you can skate by, and depending on what you face in your financial life, what curveballs, that stuff might work fine, and you might live to tell the tale. That's how you should do it. That's how you should do it. I've got more money working for, you've got more money working for your financial future, growing for your financial future. And listen, you can always take a couple steps backwards if you need to. Here's the issue. It just increases the risk a little bit. It increases the risk a little bit. And I guess I would rather be a little bit more cautious.
It increases the stress too.
Yeah.
Because when you have an emergency and you've now drained all your liquid resources and now you're tapping into that home equity line, which I think of personally as like an extra safety net. It should not be the first place you have to go in order to get money. It's only a step above going to the credit card in my mind, because you're borrowing money. It's going to cost you those dollars you have to be paid back along with the interest. And man, you talk about the stress of going down to zero in the bank, and now we're dipping negative by tapping into a home equity line. Man, I don't know, like that. What kind of effect does that start having on someone's sleep and health and relationships and all of that? What if you could put enough of a barrier in place or a backstop to help you hopefully avoid going to that home equity line? And yet we recommend that people have it, right?
Yeah.
Have the home equity line just in case. But man, let's hope that that's not really how you're going to solve the emergencies.
Well, I got that call in, I think it was probably May of 2020 or June, from a client. And he said, hey, you know how you've been telling me to get my home equity line in place? Yeah. Well, because he's a business owner, his business was closed, had nothing to do with him.
Yeah.
Right? It was mandated your business cannot be opened by the government. He was deemed non-essential. How do you like those apples? So he's sitting there saying, I wish I had access to all of this money that's in my home. Yeah. And he didn't have any access to that. And that was the lesson, because I encouraged him on the far side of it, get the home equity line in place, and then go to the bank and ask for a line of credit related to the business.
Yeah.
And because when you look at this, for some, especially small business owners, like, you are the bank.
Yeah.
And so if you've got money, especially if you're a service business, the banks don't understand, and they're not terribly fond of lending money to service businesses, because there's not a lot of collateral other than the guy standing behind the counter. So this is where I would say, make sure you have I've always tried to have the best credit facility in place and not use it, because we've been talking emergency fund, but I would also think opportunity fund.
Yeah.
So it's an emergency fund, but also an opportunity fund, and there will be opportunities that come up. The tricky thing that about having it be either your Roth IRA, the basis of your Roth IRA, a 401k loan, your home equity line of credit, or your business line of credit, those things can take a little bit of time. They may not. They might be instantaneous, but they might take a little time. And if it's for an opportunity or even an extreme emergency, you might not have the luxury of time. So this is where you do have to be careful about how you do it.
You know, before we go off the topic of what are the best places to have your emergency fund in place, what are the best vehicles and everything, I would just give one more principle that I encourage a lot of clients, mostly because this was important to me. I personally believe that having your emergency fund in a separate location or a separate bank from your normal day-to-day operating institution, like where do you pay the bills, where do you do your most liquid savings for the stuff that's coming up, in other words, bucket number 1 and bucket number 2 in the 3 bank account system, let that be in one bank. And I personally like to have my emergency fund in a separate institution so that I'm not seeing it every time I log in to check and make sure that deposits are happening and bills are happening. And that's just because I know myself. I know that if every time I log in, I see a pile of cash there, my creative juices get flowing a little too much, right? I come up with more things that I could be spending dollars on. And even if I avoid the temptation of dipping into that emergency for something frivolous, I might be more loosey-goosey with my spending in the other areas as well. It's harder for me to stay on budget or stay on plan when I know, well, there's plenty of cash there. Let's just go do it, kind of a thing.
I'm so glad you brought that up, Josh, because I would absolutely second that. Now, I've seen people where they keep their emergency fund in their checking because they've got one of the checking vehicles where, if you can, hop on one leg and and rub your belly, pat your head, you get 15%. Like you get this wild interest rate, right? I'm being
On a small amount.
Yeah, on a small amount. I'm exaggerating. So they keep a lot of cash there, and I've seen it work for them. That is playing a little bit with fire. Like I agree, principled. I would do exactly what you said, Josh. Completely agree. Okay, I want to pick up something that you said, Kevin. You were talking about risk with a business owner and how if you're a business owner, small business owner, you are the bank in many ways. Mm-hmm. So what's that mean for an emergency fund if you're a business owner? How, like, going back to where we started the show, feels a little bit more important these days, your emergency fund does. Would you say it's even more important if you're a business owner?
Absolutely. Mm-hmm. And Josh will probably correct me on the terms, but when I think it was about 2013 when Josh said, hey, we can't keep operating the way we're operating, so let's build our working capital. And let's just figure out what do we spend per day as a company, and let's build 90 days. And so we started in 2013, and we finally got it done close to the beginning of 2020.
Yeah.
And so that actually brought great comfort when there was nothing comforting about what was happening with COVID. And I think I would have been extremely uncomfortable because what do you want to think about? And if your financial house is a mess, the only thing you think about is your financial house. Mm-hmm. It's kind of like the they talk about your health, and the guy with his health has 1,000 dreams, and the guy who doesn't have his health only has one. Mm-hmm. Well, I can tell you, if you don't have your financial house in order, you probably have one dream, mm-hmm. and that it gets in order. And you might say, well, wait a minute, especially if you're a growing business, like my expenses are growing, so that amount of working capital is growing away from me.
See, I was going to say, if you're a business owner, it's so hard to, I mean, you can hear those words and say, yeah, that makes sense. And yet at the same time, if you're a business owner, you always need capital. Mm-hmm. You always are looking to grow and build and enhance. And so it's hard to stay disciplined.
Yeah, and if you have employees, you may feel the pressure of recognizing, man, I need to provide stable income to all these people who are giving their time and energy to the cause here. And so putting, again, a safety net in place so that this financial engine that is producing so much goodness for so many families beyond even your own, how do you make sure you protect that and keep it humming no matter what happens?
So we hope this helps you take your next wise step in your financial life. And while you might think that next wise step is the Hail Mary or it's the hook and ladder, it's the fun play, it might just be establishing the right structure and the right foundation to your financial house so that you can pull off some of those big plays in the future. And if you've had an emergency fund, maybe now is the time to rethink, well, with everything, how it's evolved, do I need more? Do we need more? And maybe also it's time for a coach, looking at all 6 areas of your financial life and fine-tuning that approach. So that's all the time we have for today. On behalf of Josh and Kevin, all of us at KFG, have a great weekend. We'll see you next Saturday for the Wise Money Show with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management, LLC. Doing business as Korhorn Financial Group. KFG Wealth Management, LLC and Silver Oak Securities Incorporated companies are unaffiliated.